Everyone in crypto remembers the day Bitcoin finally got its ETF. It felt like victory, the moment we'd been waiting for. Years of rejection, delay, excuses, and then suddenly, approval. Bitcoin wasn't just a coin anymore. It was a product on Wall Street, a ticker on Bloomberg, a bridge between the old world and the new. But now that the race has started, the real question isn't what won, it's who's next. Because make no mistake, Bitcoin's ETF wasn't the finish line, it was the starting gun. Before we jump into the future, let's rewind a little. Why was this ETF such a big deal in the first place? Simple. It gave institutional investors a way to touch Bitcoin without ever touching Bitcoin. No private keys, no wallets, no fear of losing funds. Just a line in their brokerage account that says BTC. And that tiny change unlocked billions in potential capital. The first week after launch, Bitcoin ETFs traded billions of dollars. Wall Street finally had its clean, regulated access point. And every other asset manager in the world started asking one question: if Bitcoin made it, can our asset be next? That's when the race began. But not every crypto can cross that bridge, because ETFs aren't about hype, they're about trust. And that's something most of this industry doesn't have. To get an ETF, you need deep liquidity, a strong market structure, and regulatory clarity. And right now, that short list only fits a handful of names: Ethereum, Solana, and maybe, just maybe, a few others hiding in plain sight. Let's start with the obvious one, Ethereum. If Bitcoin is digital gold, Ethereum is digital infrastructure. It's programmable money, smart contracts, decentralized finance, all the things regulators still don't fully understand but can't ignore anymore. Ethereum's ETF approval process is already underway. Some filings are delayed, others are in review, but everyone knows it's coming. It's not a matter of if, it's a matter of when. The interesting part? When Ethereum's ETF finally arrives, it won't just be another product. It'll be a test of whether investors want yield, because Ethereum isn't just an asset you hold, it's one that earns. Through staking, through DeFi, through its very design. And Wall Street is starting to notice that yield sells better than speculation. But what happens after Ethereum? That's where things get messy. Solana has speed. Its ecosystem is growing fast. It has real users, real transactions, and an image problem that's slowly fading. Some say it's too centralized. Others say it's the next NASDAQ on-chain. Whatever you believe, one thing's clear. Solana is the only non-Ethereum chain with the numbers to matter. So when people ask, could Solana get an ETF? The answer is not yet, but soon. Because every market cycle needs its next champion. And Wall Street loves a narrative. Now let's zoom out a bit. ETFs aren't just products, they're pipelines. They're how money travels. Once an ETF exists, trillions of dollars of pension and retirement funds can legally enter the space. That's the real game. It's not about one coin going up, it's about unlocking entire categories of capital. And Bitcoin just opened the door. Imagine a world where 3 years from now, you can invest in a crypto infrastructure ETF. Inside it, there's Ethereum, Solana, Chainlink, Arbitrum, and maybe some real-world asset tokens. That's not a dream. It's a spreadsheet waiting for an approval stamp. Because once the SEC approves one crypto ETF, they've already built the template. Now it's just copy, paste, repeat. But let's be honest, not everyone's ready. Most tokens are still too young, too volatile, or too shady to survive that kind of spotlight. To get an ETF, you need more than hype. You need maturity, audited reserves, liquidity depth, regulatory comfort, a coin that can sit next to Apple and Microsoft in a portfolio without making the manager sweat. And that's a small club. Now here's where it gets interesting. The next ETF wave might not even be crypto tokens. It might be tokenized things. Real-world assets, RWA, bonds, real estate, commodities, all represented on-chain. BlackRock already launched one, Franklin Templeton too. They're calling it on-chain funds, but it's the same idea. A regulated ETF that lives on a blockchain, not just invests in it. Think about that for a second. The biggest money managers in the world are using Ethereum, not to speculate, but to settle, to record, to move billions efficiently. Crypto isn't invading Wall Street anymore. Wall Street is quietly moving into crypto. That's why the ETF race matters. Because it's not about coins, it's about infrastructure. It's about the merging of two worlds, the one that creates risk and the one that prices it. And yet, every revolution starts small. The first ETF took decades to go mainstream. Bitcoins took 10 years. Ethereum's might take 2. Solana's could come faster. That's the curve of adoption. It always feels slow at first, and then it feels sudden. That's how change works. Gradually, then all at once. Here's what most people miss. ETFs don't just bring money in, they also bring control. Once institutions enter, they start shaping the rules. They don't play in your sandbox, they buy it. That's both opportunity and danger, because the more the system integrates with traditional finance, the less wild it becomes. And some people won't like that. Crypto's freedom will meet Wall Street's regulation head-on. The winners will be those who adapt. But let's talk timing, because that's what everyone really wants to know. When could the next ETF wave hit? If history is any guide, regulators move in seasons, not seconds. Bitcoin's ETF came after years of pressure, lawsuits, and political shifts. Ethereum's is halfway through the same storm. If the current pattern holds, by 2026, we'll see the first multi-asset crypto ETF. By 2028, RWAs will be standard. By 2030, the word crypto ETF won't even sound new. It'll just be ETF. That's the direction we're heading, from innovation to normalization. But for now, we're still early. This is the quiet part, the buildup, the tension. The same silence we felt before Bitcoin's approval. The same breath the market holds before the next big move. And just like before, the signal will appear long before the headlines. You'll see big asset managers start rebalancing portfolios. You'll see liquidity pools quietly expand. You'll notice less volatility, more stability. That's when you'll know the next ETF is coming. Because liquidity always moves before news. Always. And maybe that's the real lesson here. The ETF race isn't just about which coin wins next. It's about how money evolves, from paper to pixels, from banks to blockchains, from chaos to structure. Bitcoin opened the door. Ethereum will wire the walls. And everything after that, Solana, RWAs, maybe even AI tokens, will live inside the same house. This isn't a race of coins, it's a race of systems. And the one that connects most smoothly to the old world will win. So when you hear people arguing about which token will pump next, remember, that's noise. The real story is where the institutional money can legally go. Because the moment something becomes compliant, the floodgates open. And once the money moves, it never goes back. The ETF race has just begun. Bitcoin lit the torch. Ethereum will carry it forward. And the next generation, Solana, RWAs, and beyond, will run with it until the line between Wall Street and Web3 disappears completely. So next time someone says, "We're early," smile, because they're right. But not in the way they think. We're not early to crypto. We're early to the system upgrade of money itself.